All right. All right. We are live. I'm pretty excited. This is going to be fun. Today, we're going to dive in, and hopefully, people are here. And as they get started here, we're going to kind of dive in. But I'm super excited to see everybody here. Today, we're going to talk about using AI, artificial intelligence, to raise capital and launch and scale your fund. And I've got some really cool things that I'm going to be doing here. So I want to make sure that I can get them going for you. But we are going to get started here. I don't know if anybody's in here. If they are, then that's fantastic. Let me see. I want to make sure the chat works. It didn't work last time, so I'm going to give it a second just because I know people want to use the chat and I want people to use the chat. So let's freaking use the chat. You know what I'm saying? All right. So I'm going to go and check this out real quick on my YouTube. Check it out. See that we're live, and then see if anybody joins in from the chat. Then we can be diving in on here. It also doesn't look like anybody's over here. So, all right. Does look like we're live on YouTube, and we will go from there. I'm watching, and all right. Hopefully the chat works. Okay, cool. Anyways, today we are going to talk about what we talk about. Let me bring it up. We're going to talk about launching and scaling a fund in 2026 using artificial intelligence, because that is the thing right now, right? Everybody's talking about how do I launch a fund? How do I use AI? Do we as investors, as fiduciaries, as all of these things, how do we use AI to our benefit, to being able to maximize what we can do and be able to leverage it? So we're going to talk about that, because one of my favorite things to talk about just in general is the adoption or the fact that everybody is starting to launch funds. Let me go ahead and put this on my screen, add this up here, and then we should be rocking and rolling. So sorry about that. Where did it go? Where did you go? There you are. All right, let's go ahead and share this screen here so you guys can see over here. So I can make sure that we are all in line. Sorry about that. Give me a second. All right, perfect. Full screen, full screen. Perfect. All right, let's go ahead and share here, because we are going to dive in. And this is one of the things that I always like to start our trainings with talking about, because it is so important. It really is wild just to think about the way in which the world is moving, and then why investment funds. Why would you want to start a fund, especially using AI, and what would cause you to do that? Now, I love funds because, as we can see here, funds are probably the most lucrative business that you can start in America. I don't know if you guys know, LeBron James has a fund. Let me actually change the layout so you can see my face in here a little bit different. I don't know if you guys know, but like LeBron James has a private equity fund. Who else has a fund? Kim Kardashian, Logan Paul, Patrick Bet-David. All of these people have funds because they know if they can do what they do well, which they be a good operator, they are good at picking out deals, they're good at finding deals, they're good at what they do, and they're skilled at it. I actually interviewed a VC fund manager today on the Funds on Fire podcast, and we talked about, okay, like, how are you finding good businesses? And he goes to a certain source, finds the top businesses from that source, invests into them, and some of them have turned to billion-dollar companies that he had early seed investments on. So you are good at those type of things, and you take investor capital. So for instance, the guy from today, he's from Paris. Paris does not have a heavy VC fund or even like venture capital atmosphere. But what he does really well is he puts out a ton of content about good startups here in America at this thing called like Y Combinator. And what has happened because of the content he's created, he's had a bunch of people go, I want to invest into what you're doing. And so then he said, well, why don't I just start a fund? He's done syndications for single businesses that they've invested into, but he also has launched funds. He's on his second fund now for investing into a bunch of startups that come out of these things. And so fund managers, just in general, it's the most lucrative business you can be in. You see that 15% of all billionaires in the world are fund managers, which is just wild. That's the highest percentage of all billionaires. Even looking at people like Ken Griffin, who is the manager of, and he founded Citadel, which I think Citadel holds like 400 billion, and he makes $1 billion a quarter. $1 billion a quarter. He made his take home last year was $4 billion, which is just bananas to think about. I mean, like I think of, I like using this example too of like David Tepper. David Tepper is the owner of the Carolina Panthers, but he's a fund manager, but he's the owner of the Carolina Panthers and the Charlotte FC Club. So the Charlotte Football Club. He bought in 2018 Carolina Panthers and Charlotte FC for 218, sorry, my bad, in 2018 for $2.8 billion. His take home last year, not including, not including his net worth, is $3.2 billion last year. So for what he took home last year, he bought the Carolina Panthers for. And give me a second, my pin fell. Which works today. I don't know if you guys were on the training last week. My pin did not work last week, which is crazy. So, which is just absolutely insane. And so I'm, you know what? I think I'm going to actually go live on, let's go live on Instagram real quick, just because we can. There's one person on here. I appreciate you for being here. It actually might be me, but I'm going to go live on Instagram. And well, it's not really working. Live. Perfect. Add title. Using AI to fund. Perfect. All right, I'm just going to go live. Okay, cool. So yeah, great. And so we just see that some of the most lucrative things that you can do is start a fund. And so it's really cool. So we'll dive in today, which I'm pretty pumped about. We're going to dive into the, let me actually click out of that. We're going to dive into the design, the design, build, raise, and launch of starting a fund. So I'm actually going to go out of here. We're going to go over here. We're going to double click. And then what I'm actually going to do today, which I'm pretty excited about, is share a lot of things with you. Share this tab instead. Boom. I'm going to share with you guys exactly how, share this tab. There we go. How to design, build, raise, and launch your fund. And then what I'm also going to do is give you a bunch of prompts using AI, because there's a lot of ways that you could use AI. Now, ChatGPT is going to be, like everybody wants to talk about ChatGPT. Oh, ChatGPT this, ChatGPT that. There's a ton of value in ChatGPT, 100%. And so we could use that, but you could also use other things to help you to launch your fund as well. And so we're going to go over some of those things today, just in this time frame, really quickly. So number one, when it comes to launching your fund, and for some of the people in here that are on Instagram, I have this on YouTube. If you want to go and look at the YouTube, you can kind of see what I'm looking at on the screen here, and then we can kind of dive in from there. But now when it comes to launching and scaling your fund, you want to go through the four main things. We say design, build, raise, and launch. And so for those that are looking on here, whoops, you can see that we have it up here: design, build, raise, launch. So we're going to go over through that. Now, if you are, let's go through design. First, you want to design your edge. What this means is, what's the edge for your fund? And this is like, I'm just going to give you guys, as we start right now, I'm going to give you the prompts that you guys can go ahead and start using for like the different phases. So like, let's say when we're designing our fund, we want to figure out a couple of things. What's our edge? Which means like, what are you good at? Are you really good at finding deeply discounted houses? Are you really good at finding really good startups? Are you really good at finding, or you have a certain criteria when it comes to trading, or an algorithm in trading that's worked very, very well? What is your edge? And then what is your USP, right? Your unique selling proposition. What is that thing that helps you to be able to succeed at what you do? And then you have, what is the thesis? So what this means is, what do you invest in? So this is going to be in your fund documents that we talk about. And really quickly, one of the things that I see people do the most out of anything is they actually create their fund in the wrong order. So instead of going design, build, raise, launch, they'll actually try to go launch, which is getting your docs first. And people end up spending a lot of money on this and never end up getting started. Now, what I mean by that is, they'll go and get their documents, and fund documents cost anywhere between, just for the documents, your fund documents, oh, I need to bring this down here. Cool. Your fund documents by themselves are going to cost anywhere between, on the low end, 18. So you're going to look at, let me actually do a bigger pin than that. You're actually going to spend anywhere between 18 and I've seen anywhere between 80K just on your fund documents. And the fund documents are going to be, the fund documents are going to be a couple things. They're going to be your PPM, which is your private placement memorandum. It's going to be an OA, which is your operating agreement, and then probably like SA, which is your subscription agreement. For those 3 documents alone, you're going to pay anywhere between $18,000 to $80,000 just for those documents, which is insane. And so what I always suggest people to do, and the reason why you pay this much is because you end up going to an attorney that says that they'll put these documents together for you, and then every time you go to them, you ask more questions, they charge you. So they end up being the most expensive teacher you'll ever have because they charge you for every question. So what I always tell people to do is, hey, let's design it, let's build it, let's start raising soft commitments, and then go and get the legal taken care of for your fund. Because otherwise, then you're just wasting a lot of money, and you don't even know if people actually want to invest in what you're doing. So we want to design our funds first. Start with the design. How are we going to, what is the thesis of it? What are the things that we're going to invest into? And so here's some of the things as far as like prompts go that I really suggest you to use. So like, let's say you want to design your fund. You can use this design assistant here that I have. And you can say something like, act as a securities attorney. So this would be in ChatGPT. So like, this is one of the ways that you would use AI. There's a lot other ways you can do that, and we'll talk about more later. But one of the ways you could use AI is act as a securities attorney, draft a simple outline for a real estate or debt or VC fund under Reg D 506B or 506C with a 2% management fee and 20% carried interest. Include GPLP structure and waterfall, capital waterfall. That sounds crazy, right? But you could go ahead and plug this in, and then we're going to talk today about what a lot of these things are. So you could just use this interchangeably. You might want to go 506B. You might say 2% catch up instead of management fee. You might say, a 50-50 waterfall, whatever, but you'll get a pretty basic structure that you can refine with your attorney, but it at least gets you started. This prompt right here will save you $10,000, just the prompt, so that you're also getting ahead of it and not having to go and talk to the attorney a ton of times. Then another thing you could do through this process, so as you're doing this, when you define your edge, you want to figure out who's on your team. There are 3 really, really important roles that every single fund manager or fund needs. And those 3 are going to be your fund manager. So this is the person who's managing compliance, accounting, investor relationship, doing the, delivering, what I was going to say 5 of, delivering the K1s. They're the ones having the conversations with the accountants, with the admin team. They're helping out with a lot of that stuff because that's super necessary. That is a full-time job. Then you have the capital raiser. This is a full-time job. This is someone solely responsible for going out and raising capital. This is the person that gets the money and has the relationship with the investors, goes and meets with them, goes to the meetups, goes to places where the money is, gets in the right rooms, right? So like, get in there. They're getting in the right places to make sure that they are continue to raise capital. And then you got the operator. The operator is the deal finder. This is the person that has the edge, right? So either they can find deeply discounted real estate. They're really good at value add. They're really good with their, they've got a very good trading algorithm. That's going to be this person. They are 3 very distinct people with 3 very distinct roles. And you want to have that, but that's also your edge. But here's the thing too. You also probably have competitors. There's probably going to be competitors. So you could use this prompt over here. So, when it comes to your investors, you are competitors. You may know some of your competitors. So you'll go, you'll take those competitors, you put them in there, or you can have ChatGPT and deep research, look up who those competitors are. Then you can come over here and you say, summarize their structure, investor terms and fees. Because a lot of times this is going to be public information, especially if it's recorded and filed with the SEC, then this is going to be a lot of public knowledge. So summarize their structure, investor terms and fees, compare with mine and identify differentiators. And then you're going to have ChatGPT kind of put together almost like a knowledge base of, and help you to map out what terms are favorable, what terms do people like, what can you do to improve on your first terms, all of these things. So very helpful there. And then when it comes to another part of the design phase, right? We want to make sure that people like your idea. What's your mission? What's even your 30-second pitch that you can have for some of this stuff? Now, I love this mission one because there is a really good quote by a lady named Maya Angelou, and she says, "People will forget what you do, they'll forget what you say, but they'll never forget how they made you feel." And so we have a really what in the world's going on over there? Okay, you have a really unique opportunity as a fund manager to make people feel something, to feel a part of your mission, a part of your vision, a part of what you're doing. And so in this area, I like to tell people what their money does and the impact, right? So, like, huge part, what impact on the world is your fund making? Not just like, I think this is so undervalued. And so you have the ability to go, hey, your money's going to make you impact, but this is how your money is changing the world. CTW. This is how your money is changing the world. And a lot of times people who have a lot of money, they're like, okay, good. I make money. I have a lot of money and that's nice. I want to figure out how I can now start to be a philanthropist or start affecting the world. And so the fact that people's money is making money, but it's also making an impact is really important. So one of the things you could do, another prompt here is you can talk about your idea of validation. So when it comes to the mission, you can help it to bring out missions, but you say, summarize the 5 biggest private capital credit and real estate trends of 2025, including sectors attracting LP capital, right? So like these are anybody that attracts capital from investors. And then what's it going to do is tell you some of those trends, and you can choose things that you feel like you may be good at or anything like that. You can also, here's a couple more for you. So here's like the mission part that I like. AI generated investment thesis. Act as a fund strategist, write 3-sentence investment thesis for a short term, and then add whatever you're doing here. Real estate lending fund targeting 12% investor returns with examples of how it aligns with current macro trends. Sure. And then here's a good one too. Write a 2-sentence of why now statement for a fund focused on affordable housing in the Southeast, connecting economic trends and social impact. This becomes your storyline for your deck and webinars. This attaches directly to the mission of what you do. This helps people to see exactly how you're affecting the world and exactly what you can do, or exactly what their money is going to, in a really concise way. Now, when it comes to, and I'll talk to this, I'll probably go over here to build. Okay. When it comes to a lot of this stuff, now there's not really much AI that's going to help you to understand how to build your fund, right? So like you either have to decide, am I going to do a syndication where this is going to be a single asset? Syndications tend to be single asset. So that's going to be one document, or sorry, that's going to be one thing. That's going to be one self-storage unit or one apartment complex or one business, whatever you're investing into, that's going to be a syndication. A fund is when you're going to pull that in, put it into multiple businesses, put it into multiple projects, things like that. A fund of fund is going to be a little bit different. A fund of fund is almost like a connector, right? So you are a guy or a gal that knows where to find good deals. So if you know how to find the deals, so you find the deals and you find money, but you don't want to be an operator. What happens is you just connect the money to the deals. You connect the money to the deals, and then you make a fee in between. So you may have a bunch of friends who are doctors, lawyers, or a friend who have money, but they want to be a little bit more passive. They just want to invest their money and get a good return. So you can go to those friends and you say something like, hey friends, I will give you 8% on your money by investing into storage units, right? By investing into storage units. Great. They're going to say, cool, I like 8% on my money and backed by storage units. Plus you get some upside on the profit split. Sure. And then you are going to go to your friend who is a real estate operator, RE operator. And you're going to say, hey, I will give you 12%. So like, I will give you this money, all of their money. You can say let's say it's $2 million. I'll give you $2 million at 12% for your deal. And then instead of 80-20, I would like, maybe you say instead of 80-20, I would like 70-30 on the upside. So then now what ends up happening is you actually go and you give your people right here, you give your people their 8%. So you invest into this. This operator says, great, let's do it. They give you preferable terms because you're coming in with $2 million. And then from there, they send you back up that 12% plus 70-30 of the profits. Now, this is going to be a little bit different. So the profits could be another right? On that 2 million, 12% of 2 million is going to be around 240K, right? And then they're sending you profits too. So they're probably going to send you an extra 200K. So then what happens is you pay your friends 8%. 8% of 2 million is about 160K. And then you get to keep the 80 plus 200, 280K. Now, there's a lot of stuff that goes into that, but that's essentially what a fund of funds is. It allows you to not have to be the operator, but find good operators and then bring money to good operators. It allows you to actually, the really good thing is it allows you to raise capital for other people's deals without a license because you run the fund. And typically, if you are raising capital for other people's deals, you have to. It is a law. It is a requirement. You have to have a Series 7 or a Series 66 or a Series 5 license. Those are broker-dealer licenses or investor registered advisor license, IRA, registered investor advisor, RIA licenses. Now, here are the most common types of funds that there are. There are Reg Ds. Reg D is like the most common type of fund that there is. About 95% of all funds are Reg Ds here. Then you've got like Reg CF. Reg CF is what Grant Cardone has. Grant Cardone, you've seen him probably on Instagram, on YouTube, on whatever, screaming about all of his deals, saying you can invest in his deal, invest as little as $5,000 into his deals. That allows him to do that. He pays about $100,000 to form. That's how much a Reg CF costs. A Reg CF costs about $100K to form. He paid about $100,000 to form that so that he can massively broadcast to his huge platform to all these people. If you have a big following and a big platform, you might want to start a Reg CF fund. Reg A, this is like a mini IPO. If you plan on taking your taking that fund public or anything like that, this allows you to raise up to 75 to 20 to 75 million dollars into that fund, and then allows public accreditation or public solicitation so that you can broadcast it to anybody, and you can take all that money from non-accredited investors, which is great. And we're going to talk exactly about what accreditation is in just a minute, because the most common funds are Reg D, 506B, and 506Cs. Now, the biggest difference is 506C says two things. It says you cannot have accredited investors, so it's non-accredited only, but you can publicly advertise. Cool. Now, 506B says you can have 35 non-accredited investors, but you cannot publicly advertise. So this is almost like a word of mouth fund. I almost say when it says 506B, I say, let's be friends, right? So like, let's be friends, because it's almost like a friends and family fund that you cannot publicly advertise on. Now, I did throw out some stuff like, okay, Devin, like what the heck is an accredited investor and what is not an accredited investor? So I'm going to share with you guys my 1, 2, 3 of accreditation. So 1 here, you have to have a $1 million net worth out of your primary residence. So you want to, excluding your primary residence. Then you have the 2. The 2 is 200K. You make $200,000 per year for the past 2 years and for the foreseeable future. And then 3 is 300K per year for the past 2 years or for the foreseeable future, jointly with a spouse. So you and your spouse jointly make $300,000 a year for the past 2 years or for the foreseeable future. So that's what the 1, 2, 3 is. 1, in order to qualify as an accredited investor, this is not the only way, but the most common way to qualify as an accredited investor is 1, either you have $1 million net worth outside of your primary residence. 2, you make $200,000 a year for the past 2 years or for the foreseeable future. And 3, you make $300,000 a year for the past 2 years and for the foreseeable future. So that's how you get categorized as an accredited investor. And so in these funds, right, like a 506B and a 506C, 506Bs allow you to have 35 non-accredited investors, but you can't publicly solicit. So The reason why the SEC does that is because they don't want little old grandma to get scammed by the Instagram influencer that says, hey, put your life savings into my fund. And then they go and they lose it all. They say if you're going to, and if somebody's going to publicly advertise, they can really only publicly advertise to somebody who has enough money to lose it. So that's what they say there, which is kind of crazy to me because, and you know, a professional, actually these kids nowadays with NIL make this kind of money, but have no idea how to invest and can lose all of their money. And so like, it doesn't really, the rules don't think the rules really apply anymore, which is insane. So I think they're changing some of that. I think now they're going to say that you can have a test. Now, how investors get paid when it comes to a fund, you have debt funds or you have like equity funds. Debt funds are pretty simple. A lot of times you're going to have a debt fund with what's called a preferred return. And a preferred return is going to be like 8% interest, something like that. Somebody goes, hey, I'm going to invest in your fund. Give me 8%. That's great. Whereas when you have an equity fund, a lot of times people are going to say, you typically would get some sort of preferred return, but then you'd get a profit split on the back end. So there's a very typical model called a 2 and 20 model. And that's what we're going to talk about right here. The 2 and 20 model is either a management fee or a performance fee. You can have it on a catch up or you could have it on a management fee. Typically people have it on the management fees. They take it on the front end. And so the 2 model is my 2% of the management fee goes to me. Or it goes to the company. It goes to the company for operating expenses, things like that. We'll break down the numbers a little bit later. And then you have a 20% performance fee. That's going to be on the profit of the company. So what that means is 80% actually goes to the investors in a profit, which makes sense in something like a hedge fund, a private equity fund, a VC fund, because they're putting up all of the money where you're bringing the operational expertise. So all the money, purchasing all of those things, scaling that way does not happen without all of their money. So they get 80% of it. You get 20% of it, which is fantastic, and what's called carried interest. So you get your carry. So I'm going to break down exactly what that looks like and how you get paid here in what's called a waterfall structure. So for those who are on Instagram, you can kind of check it out on the YouTube channel if you want to kind of see exactly what I'm looking at here. But you don't have to, it's up to you. You can just join in from right here. Now, when it comes to the waterfall structure here, let's break this down a little bit because this is what happens when profits start to flow in. It cascades into a waterfall or what they call hurdles. So there's different hurdles that once they are jumped over or waterfalled through, then different economic structures take place. For instance, let's say you have a $10 million fund. There's $10 million invested into your fund. If you are running a 2 and 20 model here, you do a 2% management fee or a 2% catch up. Catch up is a little bit more of a performance fee where the investors get their 8% pref before you get paid. Investors like this because they say, hey, cool, before you even get paid, we make our money. We get our money back, which is great. They enjoy that. Now, so there's an 8% pref here, and then, but let's run through the numbers. Let's say you have a $10 million fund right here. 2% management fee is going to be about $200,000 a year. So just for having the fund, raising that capital, the company gets $200,000 for salaries, overhead, compliance, fund operations, all of those things to be able to make sure that things can continue to move forward. Now, what ends up happening after that is there is 8% that takes place. The 8% is on $10 million. So 8% is $800,000 that goes to the investors before or even after the management fee. So let's say now we're all in. Now we're all in on top on there. We've got let me actually just like preface this. Let's say there's a $4 million profit that's been made on that $10 million. The 8% pref is going to be the 8% pref. That's 8% of $10 million is 800,000, but there's 4 million of profit that needs to be distributed, right? So the distribution profits after pref and management fee is about $3 million. So $3 million, what ends up happening from here is now we're going to do that according to what's called carried interest and whatever the GP promote is or the waterfall structure. We said that it was a 2 and 20, which means 20% of the profits, 20% of 4 million goes to the general partnership, which we'll dive into a little bit later. The general partnership, which is you, the fund manager, the the general partners get $600,000 more on top of the $200K that you got for your management fee. So in this deal, the GP makes $800,000 for managing and deploying $10 million. What happens there is the LP, they're carried interest on the rest of that, right? So the carried interest on 4 million of profits ends up being 2.4 million. You subtract your, you subtract your 800, or so you subtract your 600 from that, they get 2.4 million. So all in all, they are going to get for some reason I have 3.36 million here, but that's what 3.4 million is what your investors get back. So they're getting a 33% return on their money, which is great. They love that. And then you're making 800K, which is great. So investors are happy, you're happy. That is how that works. Now, the great thing about carried interest, which is kind of wild, carried interest, back in the day, I think this was during Trump's administration, they had carried interest taxed at a capital gains rate. So instead, and this is where people either really get mad at fund managers, but the president said, hey, I want people to invest into America. I want people to invest into the infrastructure of America that's being created by a lot of these funds. So the carried interest, instead of being taxed at a 30 to 50% income tax rate, it gets taxed at an 18 to 21% capital gains tax rate. So you literally are saving the GP and the LP. So the investor and the fund manager are literally saving almost half in taxes of the majority of the money. We see here, right? The carried interest on here was 2.4 million when the pref was 800,000, or the carried interest was 600,000 when the management fee was 200,000. So you're getting taxed half on the majority of the money that comes in for you, which is great. So people absolutely love the fact that investing into a structure like this makes sense. Now, here's how the structure happens. So investors are investors, and they invest into the limited partnership, right? So they put their money in, let's say that's going to be blue, boom. So they put their money into the fund, right? They'll put their money into the fund, and then the limited partnership will invest into the deal. And then from there, so that money gets invested into the fund invests into a deal. From there, the profits then head back up into the fund and are distributed according to the waterfall structure. So that could be 80-20, right? If we're going 2 and 20 here, then that means the management company gets their 200K plus the profit splits, and then the LP gets the remaining, they get their preferred returns and their profit split. So that's kind of how it works in a fund, and that's kind of how the structure takes place. So pretty simple there. They make sure that the money goes in and then the profits go up. Now, let's go ahead and start talking about raising capital with AI, because there are so many things that we can do here when it comes to AI, and I absolutely love it. One of my favorite things to do, and I've made a ton of my PowerPoints on this, is something called Gamma. Gamma is an incredible app for making any sort of presentations. Gamma.ai, I think it is, or Gamma.app. Oh, let me see exactly what it is. Let me see exactly what it is for you. Yeah. Gamma.app is awesome. Gamma will take whatever you put in, and they will automatically make you a presentation. And their presentations look fantastic. It's not like a crappy old presentation where it's like, oh my gosh, this thing looks horrible. It's done really, really well. It looks super clean. So love Gamma.app. Incredible. Highly suggest it if you're using anything. It's one of the best, actually is probably the best app for doing that. We actually are going to be putting that into our platform. Using Gamma.app in our platform is going to be an absolute game changer. So I'm excited for that. And then another thing, of course, you can use ChatGPT. Here are some prompts that you can use for something like this, because a couple of things you want to do. So here we go, Gamma.app. But a couple of things you also want to do is make sure that you are finding investors and sourcing them. There are really cool tools like Clay, Apollo, and then we'll talk about FundFlow and what we do there. But Clay and Apollo that help you to see, to find people in your niche, so that it literally will go out, find your ideal person, get their email, scrape that stuff, and then reach out to them for you. So you can literally say, find 100 accredited investors, family offices, and fund-to-fund principals interested in private credit, multifamily, and private equity. And apps like Clay, Apollo, even some deep research on GPT, or like deep DeepSeek, things like that will help you to be able to find these people. And then you begin reaching out to them. There's a lot of cold outreach that happens, but at least it's automated and you're going to the right people. So this has been incredible and can be a massive, and can be a massive game changer for you if you're looking to use anything to find your right people. So I would say Clay, Apollo, things like that. We also have, let me see here. Actually, don't know if I'll use that. Give me a second. I gotta log in. Jeez, can't believe you logged me out. Because I want to show you guys the platform we're building over here at FundFlow is incredible. It is what we say like the smartest way to raise capital. We've kind of said that it is it's like Carta and HubSpot, but for real estate operators from their first flip to their final fund. So if you guys are looking to raise capital and manage investors, there's not really anything out there to do that. If you guys are using spreadsheets, things like that, we created something really cool that allows you to not have to use spreadsheets, rely on spreadsheets, what if my internet would just keep going, to not rely on those spreadsheets, but actually have a way for it to be able to, it's not loading right now and it just is what it is, but have a way, oh, there it goes, to be able to smart match investors. So once you put your investors in, you put the information about them, it actually will smart match them to your deal and let you know which investors are best for that deal. It's going to also help you to be able to segment them, reach out to them, do all of that stuff automatically on auto drive, autopilot, so that you don't have to worry about doing it. It also has an investor portal for your investors to see and be able to communicate and chat with you to make sure that everything is moving according to plan. I don't know why it's not loading, but such is life with technology, right? Where are we at here? Okay, cool. I want to bring it up for you so you guys can see, but I don't know what in the world is going on here. All right. So it does all of that stuff for you. Oh, had somebody calling in the middle of the live. Oh man, it's starting up the app. Come on now. Trying to get this thing going for you guys. But anyways, so we use stuff like that. So we are heavily integrating with AI to be able to build out a fund that helps you, right? From either helping you on the structuring side, which we talked about over here, helping you to figure out like what's the thesis that you should do. How should the basic structure be? All this stuff saves you money so that you don't have to go to an attorney that's going to price gouge you to figure out all this stuff. That is going to be massive. Now, what I would say too, one of the best things that one of the things we love to do is at Fund Founders, we like to help you to be able to launch and scale this fund without having to go to that attorney. So what we do is we are a mastermind, a community of fund managers that want to see you absolutely succeed. Where the heck? I'm telling you, technology today has not been my friend, but it's okay. We want to absolutely help you to succeed in a big way. And a lot of that means, here we go. Where is it? Okay. Anyways, oh, here it is. It's up here. Goodness. Cool. So we want to help you to be able to succeed in a big way. And so what we've done is we put together, let's get there. We've put together a mastermind for people to help them to launch and scale investment funds. So if you're looking to launch a fund and head into 2026 to do so, I want to be the person that helps you to do that. We want to make sure that we can help you to be successful. Where? It was just here. Okay, stop. I'm just going to do right here. I want to help you to be able to be successful in doing that, making sure that you are scaling and launching appropriately. You are like all of your docs are taken care of. You are in a community with other fund managers. I walk you through from A to Z, holding your hand, helping you to understand exactly what should your waterfall be? What should the structure be? What's the best way for you to be able to raise capital? How should we go about strategizing this? How do you set up your structure for in a really like preferable way that investors really want to see? what are the ways that you can be able to take advantage of all of the knowledge that we have. My partner is an SEC attorney. He has launched and scaled hundreds of funds, or launched hundreds of funds for people. Okay, I'm finally in, so I'll show you this a little bit later, but launched hundreds of funds for people. And then we also have a course that helps walk you through exactly, so that even on your own time, you can be able to do that and know exactly what that looks like. Oh man, it still only can see half. What in the world? See what that looks like. And so what we do is we want to walk you through all that. Instead of paying $18,000 to $25,000 for your fund docs, we want to fast track that for you. We want to make sure that you're not spending a ton of money on that, and then spending a ton of money on the docs and not getting the community, not getting the course, not getting all that stuff. So instead of charging 25,000 for docs and then the course and then all this stuff, and then making it so that you have to still go to other things to learn, we wanted to put all of that in one place for you. And so we only charge $25,000 for you to be a part of the Fund Founders Founder Circle, for you to get all of your docs, for you to get everything that you need as far as the community, for you to get hand holding. And typically what we'll end up doing is we'll end up launching within literally, oh, here it is right here. Duh. Screen, boom. So we'll end up launching. Perfect. So what we do is we end up helping you to launch within, depending on how quickly you do it, we end up helping you to launch within the next 30 days, 30 to 60 days. You will have your fund up and running, and with an amazing community at your back, helping you to be able to do that. So if you guys are interested in doing that, I'm going to put a link in the chat that just for a place for you guys to go. You can go to wearefundfounders.com/apply and fill out that form, because I would love to personally be able to talk to you. I want to talk to you and help you to be able to launch your fund, to be able to get to do the things that you want to do, to be able to help you to scale what you're doing, because there's a lot of really great ideas out there. I want you to be able to do it legally, compliantly, and helping you to do it at a very high level. So if you're interested in the Founder Circle, let me know. You could reach out to me individually on Instagram. You may have my phone number. You may have anything. You can email me. I would love to be able to talk with you and help you to walk through this. I also want to show you what you get, because not only do you get that, you also get 2 years access. Here we go. Finally, sheesh. You also get 2 years access to FundFlow OS, which FundFlow is our platform for helping you to launch and scale your investment fund. Where is it? It's right here. Perfect. Your investment fund, and then be able to have it on autopilot. So it helps you to keep track of your investments, where they're at, helps you keep track of the people that you have. So the contacts that you have in here, you can actually enrich your contacts. So it'll go online and it'll look up more information about them. It'll check your emails. It'll check your notes that you have on them, and then give them a likelihood score of investing. And so then when it comes to your deals, you can then smart match them to your deals. So it can say, hey, I think these people are people that I would suggest for those deals. These people are a fair match. These are a good match because they've got the money, they've got a high response rate, they've got a good check size, and it fits your deal. Their thesis, so you can set up profiles for them and everything, or they can set it up inside of their portal and all that stuff. So then it helps you to understand exactly what they want to invest into. You also have private loans. You probably have loans out with some of your investors. This will help you to track those loans, keep track of them, and help you to know, hey, one is coming due then, and different things like that. So it's an incredible platform for helping you to be able to manage it, send emails. So when you send these emails, it will also, and we got a little bit of an error right there, but when you send these emails, it will also send them based off of, hey, what's the deal that you're doing? How's that deal going? What's the information about this deal? It's going to take all of that stuff into consideration and then write the email for you. And as you can see, it's more than just this. There's also a ton of other things you can do in here, like build out your pitch deck with Gamma, like we talked about. There's different AI tools. There are assistants, there's deals, there's all kinds of stuff that we've built out in here to make sure that you 100% are utilizing AI to the maximum ability to launch and scale your investment fund. So that comes with the Fund Founders Founder Circle membership. You get this in there. I will help walk you through it, and we will onboard and migrate all of your data into here. So massive, massive upside on joining the Founder Circle. We save you a ton just in legal fees, period, by themselves. You save so much on like not having to go and launch your own fund, right? Like, let's just say your docs are $20,000, you save almost immediately. Then you get FundFlow OS, you get weekly coaching, you get funnels and templates, the community in itself. It's essentially a fund launch accelerator where we're helping you all instead of paying $50, $60, $70,000 for that. We actually have two or three competitors. One of them charges $42,000, the other one charges $35,000. Instead, we charge $25,000 full access for all of this stuff. So if you are interested in anything like this, you want to launch your own fund, you want to be able to scale it, reach out to me. I want to be helpful for you and help you to scale and launch your investment fund as well. We've built out some really cool things. We want to make sure that you can take full advantage of it and to be able to do that. Because I think that the world needs more people that could be able to invest into America, into your deals. There's a really interesting statistic that I love. It says, actually, I don't love this statistic, but I love the awareness of this statistic. And it says there's $82 trillion worth of assets under management in the US. 82 trillion. Let me go back to my face here. $82 trillion worth of assets under management in the US. And, whoops, that's not my face. Stop sharing. Okay, $82 trillion worth of assets under management in the US, and only 1.4% of that is managed by minorities and women. So that means 98.6% of all money in America is managed by white men. And so that means there is a massive, massive opportunity for people like me, for women, for minorities to be able to come into this space and completely disrupt it, to completely shift the diversify Wall Street is what I love to say, completely put the scales of where money is managed in America and completely flip it. And so my goal is to be able to help people to diversify Wall Street, to make it accessible to everybody, to make sure that everybody has the same opportunity, because there's a quote that says, the world equally distributes talent, but doesn't equally distribute opportunity. And I want to help make sure that everybody has a chance to get equally distributed opportunity in this space. So if you guys are interested at all of joining Fund Founders, the Founder Circle, let me know, because I think it can massively change the world we live in, massively scale up what you're doing, the businesses you're trying to run, the deals you're trying to get into, and help you to be able to take it to the next level. So if you guys need anything or you have any questions, please don't hesitate to let me know. Reach out, apply for the Founder Circle, and let's definitely take this to the next level, okay? And so I'm probably going to head out and we'll go from there. But as I always like to say, to great success and greater impact. I'll see you later. Peace.